Mr. Chris Frostad, how are you, sir?
Hello, Matt. Very good, thank you.
I'm glad to hear it. We are going to have a huge debate. Choose my words carefully there. Huge, very carefully.
I got to go now.
Yeah, big miners versus juniors in the uranium space. It's a debate which I think it's a really good conversation to have, because in other commodities, it kind of feels like, we know how that's played in the gold space. We know how it's kind of played in copper, etc. Uranium's a little bit unique, partly because of the geopolitics, partly because of the size of the market as well, and the kind of very few kind of drivers of this space. I, as an investor, want to make some money. I've got very excited about the juniors in the space, but I don't really know about all the moving parts, and I certainly don't understand how the big miners think either. So, should we get into it?
Yeah, well, it is, and it is different, because what you don't find in uranium that you do find in a lot of other commodities, gold or copper or what have you, is a lot of small or mid-sized producers.
Mm.
As a matter of fact, it's almost fair to say that you never see a junior bring a uranium mine into production, or at least not yet. So they're working on it. Which means we should be operating with a different mindset and with different objectives.
For sure, and I think it comes back to one of the things that I think John Borshoff said to me back in 2018-19. Was something like, we don't have the people in the space who've actually, operated business companies in the last cycle, right? They don't know how to build the mines, they don't know how to produce, and they're certainly not aware of all the risks involved. And when I took that advice and kind of built it into some of the questioning I had with some of the more advanced stories in the early days. And I don't see some of those more advanced stories even these days proving that they can get things into production. A lot of chat.
It's
not just a price thing. It's not just a price thing, right?
That's right. Yeah. It's I think more so than a lot of other commodities, it's very capital intensive to build a uranium production plant or to mine uranium. And there's it's a lot more heavily burdened from a regulatory standpoint, the commodities. So it's not something that you can kind of do on the fly out of your basement, or, or what have you, like a lot of small miners can do in other commodities. And so when you talk about not having the resources, I mean, right now, I think there's maybe 10 companies globally that are accounting for over 90% of the uranium production. So it's a small club, which means that there's not a lot of opportunity to train up expertise or find resources that aren't already, working for some of the big guys in that. So those people just don't exist.
And I wonder, as an investor, the thing that I was in the last uranium cycle as a banker. We were, funding some of these companies or issuing large term sheets to help these companies get going. And then, of course, Fukushima happened, and the rest is history. This time around, I think I started really kind of trying to understand what the macro thematic drivers were on the demand side. I was very intrigued by the supply side, and it was great. So just understanding that kind of huge dramatic backdrop and why this was something that I should get into, and we did get into it in a very, very big way. Over $5 million or so, and really bought into it. I found myself over time, and I think this is reflective of like some of the retail who are just a little bit bored of the same repetitious narrative that's going on. Is like, I don't want to hear any more macro justification. We get it. There's a big infrastructure being built out. The demand is absolutely there. People will argue, 2 years either way on when that timing or that crossover is going to hit, etc. I'm now interested in companies who are real, with fundamental drivers, with the skill sets, with the teams who can deliver these business plans and strategies, with an asset which actually matters. And I guess today's conversation for me is, we're not going to talk much about the macro. We understand a little bit. We may touch, we will touch a little bit upon it, but to remind ourselves. But this has got to be about how do juniors set themselves up for success in the current place we find ourselves, where it's in the sort of holding pattern at the moment, and how do big companies think? Are you okay with that? Sort of, if we can sort of stitch around that, yeah.
Absolutely, because I know, and I think Chemical framed it as we're in a structural upcycle. So things are lifting and building over time, and they will. But what does that mean for those juniors, if you will, and what should their objectives be? And I think more than anything, they need to be attractive to a major. That's how we're going to be gauging success moving forward. Are we exploring for finding and developing assets that are going to be attractive to a major? Because that really is the success point. That is the monetization. That's the end game.
Do you think you know what a major wants?
Yeah, and it's going to depend. It's going to depend on where they are, whether it's operationally compatible with what they're currently doing as well. It's not just grade, which is what people look at all the time. And I think so. If you're looking in the basin, it's going to be very different than if you're looking in the States. Whether if you're looking in Australia or you're looking abroad in Africa, it's going to vary. And in Canada, in northern Saskatchewan, it's got to be compatible with what they're currently doing. And as we talk about grade, that's not an unimportant factor, because it can be too high and too low to be attractive, and it can also be not geologically or geographically convenient for them.
So I've got a slight segue. It's related, but it's also a slight segue. So I get emails in every morning, a whole stack of them. People asking, some intelligent questions, some dumb questions, but it's all fair game, because it's what people are thinking. And this one was around jurisdiction, and it was something, I won't read it verbatim, it's sitting in front of me right now, but general gist. And I initially thought, you've got to be kidding me. Why would you even think this? And then I can finish it, and I was like, actually, that is the state of the nation right now. This is where we find ourselves. And okay, the gist was, dear Matt, or dear Crux folks, as he says, specifically Matt, when you're next talking to I won't name the name, talking to this uranium commentator, can we talk about the problem of South Africa versus Namibia? Because South Africa is well armed compared to Namibia, and South Africa has a much larger armed force. And if they decided Namibia might be a profitable conquest, they might go in there and sort of take over some of these uranium assets. Genuine concern, uranium investor from Canada. Okay, so you can sort of see why I initially thought, you've got to be joking. I think, because you kind of got the kind of US. Then I thought, actually, hang on a sec. You kind of got the US talking about, Canada's fair game, Greenland's fair game, Panama's fair game. You've got Israel, Palestine, you've got Russia, Ukraine. That's setting the mood and the tone, and is making investors nervous. So the actual point, fair point to this individual saying, I'm going to voice my genuine reservations, but is this a possibility? I think the answer is no, by the way. It's not. However, if that's what's stopping people from investing, this kind of jurisdictional risk thing, where jurisdictional risk used to mean different things, didn't it?
Now it can be
more complicated.
Yeah, it can be really scary risk, or it can just be slanted. I mean, if you're looking at identical situations, say even between Australia and the United States, you've got to take into account that the U.S. is far more domestic support. So you've got that going for you. Because they need the stuff. There's probably a clear path for a junior for M&A and the like than there is in Australia. Assets could be identical and could have the same economics associated with them. But if you're making a choice between the two, the U.S. right now seems to be far more supportive and desperately in need of, and therefore you've minimized, if you want to call that jurisdictional risk, as opposed to the U.S. marching up into Saskatchewan and taking control of Cameco.
Okay, right. let's bring it down a bit. Let's bring it down a bit.
We're ready for them. Believe me,
we're ready.
Oh yeah.
Okay. Just everyone needs to calm down globally. We need to calm down. It's all good. We're all on the same side. Come back to this tier 1 comment. Tier 1 deposit. That used to mean make it as big as possible. It used to mean this will require a massive balance sheet because the capex is going to be insane. What does that actually mean in the world of uranium today? Because when I look around at the people who are producing or going to be producers, this is small beer at the moment. So what does it actually mean today?
Well, I think again it comes back to being compatible with what they've currently got going on. If you actually have to start out in Canada and build yourself a new mill, then yeah, you're into something very, very different. I mean that's where NextGen's at right now, struggling with, can they make this thing big enough, low cost enough? Can they justify a mill on the other side? If you're dealing with the Camecos and Oranos of the world that already have infrastructure set up, and quite frankly, they're not looking for toll milling contracts with local miners. But if you're looking, right now they are permitted and set up and to process a certain level of ore, and from a grade perspective. Okay, so if they're looking to process 15%, ore grade, and you've got 5, which is high grade. Well, that means they've got to process 3 times more rock to come up with the same uranium. They've got to put out 3 times more tailings than they're permitted for. It doesn't necessarily work. And same on the other side. If you're coming in with, if you're an ISO and you've got a 45% deposit, that probably has to be blended and downgraded before they can process it. Doesn't mean it's not attractive to them. Certainly it is. But if you're looking at something, sub what they're set up for, that's not necessarily going to be attractive. So there's a gauge there. And if you look at again NextGen, who's on the other side of the province, too far away to be trucking rock, they've got that's 4%. It's a 4% ore grade. That's high grade, but it's got to be able to carry the cost and burden of building its own processing plant out there, and they've got to go it alone. If you're Denison, you've got high grade. I think they're up and around 19%, but they're able to go it alone because they're going with ISL, which is cheaper and allowing them to produce at that rate. So, you've got to work within the confines of what's attractive in the area.
Okay, there's not that many big players, right? We said that right at the beginning. You've got a whole bunch of juniors now. I think I counted 80 uranium companies, the last count, certainly on our database. Most of those are so small, so inconsequential, and they're playing the kind of we'll go along for the ride game, and hopefully we can survive as a company until someone comes and takes us out. They're not even interested in getting anywhere near barely exploration, let alone development, and let alone production, right? So of the juniors who have got access to capital, who can do some drilling, I think we as investors got to try and work out, well, he realistically is going to be able to kind of move this thing through the entire economics reporting phases and fund the ability to get into production. I would say I'm struggling to think of one at the moment, right? Genuinely trying to struggle to think of one. But that's not a conversation as a CEO you can have. You got to come to market and go, we are going to build this thing. I, as an investor, are going to go, you are talking out your backside. So I need to be able to kind of differentiate between he possibly could and he definitely can't, but has got to take that game. I've got to discount that conversation across the board. So in reality, if these juniors are not honest with us, how on earth do they kind of raise the right type of money to spend on the right type of things to be appealing to one of a very small audience of potential buyers or funders for advancing them through to the kind of next phases before eventually taking them over? It's kind of like a lot of spinning plates and a lot of smoke and mirrors all in the same room, and that's messy. and it feels messy at the moment.
Well, what is going to be attractive, and it's not that exploration is unattractive to majors. I mean, we saw Rio Tinto come in and earn in on a project of ours, but because it was in the right district and not just northern Saskatchewan, right? It was on trend in the right area. All the geophysics had been done. A lot of good, successful drilling had been done. Like, there's enough work for them to look at this and go, okay, if we're going to get into something early, this is, and it was large enough too that they would, want to find that attractive as well. So, it's not that they won't get into it, but again, you have to. And I guess this was your question: is how does an investor listen to the junk that comes out of our mouth and understand what the objective truly is? When I first got into this, I was told, whatever you do, always tell them you're going to production. Like that was what you want to tell investors, because they don't understand the cycle long enough or enough to understand that that's probably not going to happen. But the reality is, what we should be doing and should be talking about, and people should be listening for, is the objective is, how are we going to monetize this thing at the end of the day? How are we going to create an asset that is going to be attractive to a major, period?
Well, or two majors. That's all you need. You need that competitive tension, right? The problem with saying, oh, we're looking to sell this thing is people, you feel, as the CEO feel, oh, I've just kind of given away my bargaining chips. I've kind of, shown my hand, and the major's now going to come and bend me over and, take advantage. And that's, that's the rationale behind telling retail that you're going to build this thing out, right? That's the actual retail. So it's probably from a good place, but it's more than a white lie. It's just made up fantasy. So if you think I think you're right. The better conversation is, look, this is how companies like us monetize ourselves. It's never going to happen, but it'd be a better conversation. This is how we monetize this thing eventually. And this is what you're investing into, dear retail investor. Why don't you come along for a ride? And it'll only be, probably the next 3 years, we'll kind of make this thing look as beautiful as possible, tie it up in a bow, and have some competitive tension between some would-be buyers in the future. So the thing is, you can't see that far. You know who they are, but you may have a vague idea. But when I was in banking days, the answer I always got was, oh, we're going to be taken out by the Chinese. I'm like, really? Are you? All of you? Interesting. Because it was like, that was the business plan. That was the business plan. And at least it was being sort of slightly honest. And now it's kind of, that's not a possibility, certainly not in Canada with, ownership levels, etc. But it's just a very difficult place at the moment. I think uranium, especially uranium juniors as well, it kind of feels like half the people at the table have no clue about the space, and it's based on what they've watched the same videos as other retail investors to kind of work out what they're going to say at their next interview. That's what it feels like to me, and that can't be a good thing.
No.
Can't be a good thing.
Mm-hmm.
Sorry, I'm being really negative, but I'm allowed to be. Okay, so where do we go from here?
When you're evaluating these juniors, I think you need to understand what, look at it the way that they're really looking at it underneath is am I in the right place? Have I got the right asset? That's going to be attractive at some point in time in a market that we all believe, otherwise you're not watching this YouTube, is just going to keep getting stronger and stronger and stronger, and access to product is going to become harder and harder and harder. So we're going to be, we're moving into a market that's, going to be better than worse in terms of monetizing a solid asset. And the other thing too is we do tend to throw out too many, grade numbers and things like that. And to understand that a company making deposit in the US is distinctly different than a company making deposit in Canada right now. I mean, I would say in the US right now, if you've got a minimum of 15 million pounds and you're looking at grades, if it's ISL, you're looking at grades, well, that's a minimum, but you're looking at grades between, 0.05 and 0.2 or something in that realm. Now you're starting to get into something that might be economic, but it's not, 75, million pounds of 10%. And I think that confuses some investors as well.
Well, there's an interesting number. I think they're I'm looking at Your Energy. I mean, do they have 15 million pounds? I'm not sure they do. they got it going, right?
I'm not sure whether they do.
Yeah,
I think, yeah.
do
But
write in and abuse me if they do, folks. But the
I
point
mean,
is,
I'm just throwing that out as a minimum or something. But I mean, really, you're looking at 50 million pounds. That's solid down in the
well,
U.S.,
it's
right?
huge, but yeah, absolutely. But there's not too many playing with those sorts of numbers. Mostly, it's a lot smaller. And I guess the question I was going to is like if you've kind of got it, we're starting to buy ISL, how do you frame it? Kind of got a low capital intensity there, but it's profitable versus some of these high, obviously Athabasca is famed for its, higher grades, etc. But they might be a lot deeper, and it may not be ISL because the weather conditions suggest that it might be a little bit harder, more technical, at least anyway, in most instances. So, do you think that there's kind of preference by the bigger players as to? I appreciate what you're saying in terms of where you are, etc. But in terms of ISL's 50%, hard rock's 50%, so I guess there's no real
Well, hard rock in the States, you're
there.
talking about a very different, I mean, because you have to have access to a mill if you're going to go hard rock in the U.S.
So what, we got one functioning one and two maybes?
I know.
Is that where we're at?
So yeah, so that's a bit of an issue. Otherwise, you've got to have, a lot of pounds to justify that kind
Right.
of for sure.
Think about that. So think about that, folks. So that's a point. At some point down the line, you've kind of got a large kind of capex. The cost of that capital, forget about the technical risks, like such as the recoverability, the payability, transportation, etc. How, because I've got this thing about margin at the moment, trying to help investors focus on what possible margin is this company capable of making. And you can sort of work those things out pre-economic studies as well. It's you do a lot of comp exercises, and very very few of these juniors are showing that they're going to be able to get the economics right, and that's the name of the game here.
And the transport, you mentioned transportation, and that's huge. It can be up to half your costs.
Yeah,
right, easily, depending on how close, or it can put you right out of the game. To try and get it there. We've looked at a bunch of stuff.
Well, you won't get it funded.
Well, no, you won't get it funded. Yeah.
Which is why people are sort of desperate to. I think it's certainly in the States, a lot of explorers are desperate to kind of connect themselves and associate themselves with White Mesa and Energy Fuels plant down there. And every time I speak to Mark Chalmers, he can be more clear. I said, like, you've got one company, Ice Energy, got to deal with them on the Tony M mine, and obviously they've tried recently. To kind of buy the Anfield project, but I think UC put a kind of kibosh on that. We're certainly put a spanner in the work for now. But they're the only company who've got to deal with Energy Fuels. The rest, Western, I mean, forget it.
Yeah.
And the rest, there's nothing in line there. It's going to be, well, I'm not even sure toll milling is up for grabs.
And you can draw a circle around White Mesa. And that's about as far as your deposit had better be. Otherwise, it's completely undoable.
So look at these things, look. You got to look at these things, folks. Where you throw your money around. It's anyway. That's the US, and I guess up in Canada, I think the voice of reason seems to be Cameco at all times. What's that? They obviously made some announcements this last week or so.
What's what?
Cameco.
What about them?
Have they not been talking to the market this week or in the last couple of weeks?
They came out with their results last week, and I guess, again, it's a lot of the same. We're in a very strong position, and it's the best market we've seen in decades, and yada yada yada. But one of the interesting things that they did say was, with regards to, they're getting asked a lot of questions about increasing their capacity overall to produce in light of what's coming on. And what the answer was interesting. It was, they're looking to turn on, they're working now to turn on 3 Mile Island again because of their arrangements with Microsoft. They said it's not, you got to understand, they're not doing that because on spec because of the growing demand. They're doing it because Microsoft handed them a 20-year contract to buy power from them, and they said we're in the same sort of boat until we see. I mean, contracting certainly going up and up and up, but until we have in hand the real contracts, the real sincere long-term, healthy priced contracts, we can turn up the dial, but we're not going to make any significant infrastructural moves until we've got those in hand, because we don't have to. Like there's time. There's lots of time for them.
But where's the power held in this space? Because you've kind of got you've got the utilities as US utilities, big kind of drivers in terms of purchasing, and no one really knows what they think, and certainly it's been guesswork for the last 5 years. And let's say I've kind of given a little short shrift to a lot of the kind of market commentators on the demand side of things, and put even less on the supply side of things. But you've kind of got those big drivers there. Then you've kind of got the Camecos and the Kazatomprom, etc., who perhaps can also flex their balance sheet muscles and maybe take advantage here. But and the Iranos obviously, and you work with obviously Cameco and Irana, they don't seem to be taking advantage of things at the moment with their budget or ability to either raise capital or use money that they've got to pick up any of these juniors. They've got enough on their plate. So how do juniors flex their muscles, or how do they use their size? I always think small and nimble and agile, and with all that kind of growth potential, just curl up, ready to go. But I'm not even sure the juniors are playing it that well at the moment. So what should they be doing, and what should I be looking for?
Well, again, I don't think they should be wasting money on just noise. And that's what, again, you're trying to bide time until you actually do find something. But and that's the game we're forced to play. If I only got one or two projects, and I'm hoping to heck, I'm going to get a zinger out of the next one. I just need time. I need time, and I need to be able to raise money and what. So I think the thing is to focus on solid projects, like to really truly evaluate the projects you have access to, and to determine whether evaluate them honestly in terms of whether they are of compatibility with the folks that are in the area that might be interested in buying it at some point in time, and get yourself enough runway to move into a stronger market. Because I think when you say they haven't been stepping in and they haven't been flexing their muscles, etc., that doesn't mean they're not going to. They just don't have to right now. They're letting the market, they're letting us go out there and spend money and investor money and strengthen up these things where we can. And if it doesn't make sense to them, they won't do it.
But that's such a passive thing. That's like me telling my wife I'm going to go to the gym, right? Don't you worry, I'm going to go. No, I don't think that's not enough control. I don't think. What I'm trying to get to is, I'm trying to identify the juniors who've got the level of control to say, I will be master of my own destiny. I'm in an environment where retail look towards spot price, and everyone is anyone from Tim Gitzel, Cameco, Sprott, etc. Everyone's saying, stop looking at the spot price. That is not a reflection of how producers get funded. They look for term contracts, and term contracting, you will never really know what that looks like, but you might be able to kind of guess some kind of range that they find themselves in. And if those contracts are issued, it means that someone who knows what the heck they're talking about has evaluated the company's potential to be able to get into production, and then that term contract's used to raise capital to advance those, advance things. What we're seeing though at the moment is you've got deep yellow in a little bit of conversations with the Namibian government, licensing, etc. And even before that, they're saying, well, actually, the term contracts aren't at a level which suit us. You've got, there's a few other developers, better not names. There's a few other developers who've got some term contracts in place, but maybe not quite enough to kind of get the capex component fully covered from the equity side, or to be able to raise the debt that they need to be able to move these things forward. So the whole pricing equilibrium at the moment is, again, it's off whack for even the most advanced of juniors, who are kind of in what I would classify as a development phase. So again, if the guys in the industry are struggling to kind of work out how to play this thing, how do we, the retail investors, work out what good looks like or good doesn't look like? I'm struggling.
Well, I think first of all, there's only a couple of buyers, right? At the end of the day, we've got, like you said, there's Cameco, there's Orano in North America, and they get along famously. So if I know this isn't going to be a madhouse, auction going on, why would I try and get in any earlier than I have to? So I'm not surprised that they're not running around buying up development companies right now.
Do you think that they think these companies might struggle and fall over?
For sure.
Yeah,
For sure they do. For sure they do. This is not the time to step onto the mat, and so to speak, and start picking this stuff up, because I don't have a whole lot of competition for these things, and I don't think I'm maxed out in terms of price. It was unless a new player gets involved. If Rio Tinto all of a sudden wakes up one day again and says, maybe I'm going to try uranium again, we'll see that kind of thing happening. But that was, when you look at the transaction that happened with Hathor, that whole process, that was somewhat comical, because it started with Cameco doing a hostile on Hathor. And then Rio Tinto stepped in and paid an exorbitant price for it, because they decided they wanted it. If any of these companies want in, they'll pay for it, because they can. They paid a ridiculous price for Hathor, and then sold it off for pennies. So, there's no reason for us to be expecting the likes of Cameco or Orano or any of these other uranium producers to be trying to gobble up the world right now.
Because they're overvalued?
No, because we can get a better price, and because they're not going to get.
That means overvalued.
Yeah.
Literally the same thing, right?
Yeah.
So the question of, are they all overvalued, or some are overvalued?
It's not that they're overvalued. I don't believe it's that they're overvalued. I believe they're not going to get. The price isn't going to go skyrocketing over the next year or two. Right. Because what we're seeing is, and we've talked about this too many times, but there's this decoupling. The equities are not rising in tune with the price of uranium, or what we want to perceive as the price of uranium. Therefore, they're looking at this sea of juniors as they're going to tumble along as they do. We don't have to worry about them getting too expensive, unless they really are hitting on a successful path, and in which case, we'll pay a little bit more for it. I'll pay more for it later than trying to guess right today who's got the goods.
It's kind of funny. I've had a few conversations in the last month or so. So I know that this 2025. I had one as recently this morning. It's a $4 billion Aussie gold company called Perseus Mining. Great CEO, Jeff Quartermain. As he describes himself, long in the tooth. And I said, you must be enjoying this gold price, $2,900. Do you ever think you'd see it? And he said, no. I said, do you think it's sustainable? Said, I don't know. So I said, so why? So talk to me about your hedging. He said, well, we've hedged 25% of our gold sales at $2,500. I'm like, why'd you do that? Because you got $1 billion in the bank. You're producing about now free cash flow about 200 million a quarter. Why would you hedge? And he said, because I've seen how these markets go up and down over been through multiple cycles. You think the sector can do no wrong, and then it'll suddenly kill you. And it kind of feels a little bit, reflective of, what we saw in the uranium space is, where we are compared to where we were 4 years ago. It's fantastic. 3 times higher, I think. Well, 3 times higher. I'll go that 25 to 70-ish. But you've got to believe that price will go again, don't you? You must believe that price will go again, and all of the kind of macro factors we said we wouldn't talk about will come to play, and it'll suddenly go again. It's not going to go back down to 25, is it?
Well, no, I think that's. We're going to believe that. Anything can happen, but I think.
When
you say go again, are you talking about the spot price? Because if you're looking at the long-term price and then the contracting price, I think it's going to continue doing what it has been doing, which is getting stronger and stronger and stronger. Is it going to go back down to $25?
Yeah.
No, it can't. I don't believe it can.
And I'm just going to say this for the American audience who will go, oh my God, he's so negative. I'm playing devil's advocate for an interview here. So we're talking about things, okay, I don't think it's going to go down either. Literally, I just suddenly thought, oh, geez, I'm now going to get loads of complaints.
But I mean,
Um,
that's kind of that's the joy of the uranium space right now. I think is that
yeah,
for investors is that where in a lot of other commodities you don't know. Like yes, it can get volatile, it can get crazy, something can happen. I think we're in a place in this particular commodity where we've got a lot more comfort in that it's in where our downside is from a commodity price standpoint.
right. Okay. Okay. It's interesting, isn't it? The way that companies play things. I don't think enough of the junior management teams know what they're doing is my problem. There's some really good stories out there, and if you've got access to capital, it says either one or two things. One, you've raised some very expensive capital because you don't know what you're doing, or two, you've been able to access money where perhaps others can't. So I look to the companies. Well, that's why I always come back to this kind of business model and strategy and team and asset, and if you can articulate a very clear plan about how you, at the moment, quite frankly, just survive in this market and not dilute the shares out of your shareholders. That's a kind of interesting story for me at the moment, because I do think we'll go again. The space will go again, and I do think that some will come valuable. Those survivors will have a chance to make their projects valuable, but ultimately, I think what we're in violent agreement about in this call is that most of these juniors need an exit, which isn't I'm getting into production.
Which
right?
yes, yeah, which they're not necessarily aimed at. I think we're going to see a lot of shakeout in the next year or so. I mean,
I hope so.
Yeah, we saw
I
a
hope
little
so.
bit last year, but yeah, yeah.
And the reason I say I was kind of I think I told you this last time. I said I was sent a document, a technical assessment of a, should we say, a very large developer's one of their assets, and it was quite clear from this very large technical document that it's, again, all is not as advertised. There's no way on God's green earth that this particular front, leading project, one of their very large portfolio, it was not economic, not as an ISR project, not as anything, and I'm not quite sure why they do that kind of study on something which wasn't their best project. Maybe it's because it's the most advanced and needed something to do, but it's quite clear that not everyone's going to be able to produce economic uranium, and I think that's the scary bit for me. And all of it, I keep saying it. I don't think all the companies talking about getting to production will get into production because the economics just won't be there unless these contracts come in at it's not twice the amount that they are. It needs to be like 5 times the size they are now. That's how bad things are.
But I mean, if you're a junior, if you're a mid to small tier kind of player, you're really running 2 companies. You're running operationally, strategically. You're trying to run a company, and then you're trying to manage the markets and your board and people yelling at you, and it's like a whole separate entity, or personality that you have to become outside of what you really need to do, and that's where things get troublesome, for sure. It's
but so in terms of all those variables, what are the kind of characteristics that make a junior attractive for acquisition? What's it going to take today?
Well, again, it's going to come down to the asset. So
right.
I think, again, it depends on where you are. So geographically, it has to make sense. It has to be compatible to what the junior you're focused on, or the major, who's potential majors that are potential acquirers. It's got to fit into their model. So where is it geographically? Where is it geologically? How much work has been done on it to date, and is it all heading in the right direction? It's all of that kind of stuff. You got to put yourself in the chair of the major and go, well, would I buy this, and why would I? And that's not always easy to do from our vantage point, which is trying to make what we've got look as good as possible, because you can only sell what you got in the warehouse, and you're flogging it. But you really do have to look realistically and honestly from the other side of the fence, as to what, do I have something here that is attractive and marketable and monetizable at the end of the day? Or am I just playing a stock game here for a couple of years and getting out?
Yeah, I think it's a tough space at the moment. So it's like these kind of lulls, these little troughs, time for contemplation and thought and analysis about do you continue to hold onto the stock? Do you reallocate to the stock to other stock in the same sector, or do you just get out of Dodge and wait for the space to go again? Because I think a lot of uranium folk who hung on in 2024, you know, it was sort of interesting. It was interesting. If I'm looking at my whiteboard over there, you know, I'm looking at maybe on average just under 3-time gains on gold companies,
Mm-hmm.
where we changed, you know, and it was clear that, you know, as gold started to move, that the producers would do well, and they have. So maybe does uranium fall into the category of be patient, long term holds, back of the drawer, forget about it, don't think about it. It's just part of the blended approach to investing. That's what it feels like.
I think it's a good time to be reevaluating. I mean, because the market over the last year or two has gone through we've gone through an earthquake here, right? It went up, it went down, it went this, it went that, you know, what have you. And I think we're, you know, probably at a point where you don't want to just sit back and be passive and hold on. It's probably a good time to see what people have done over the last year or two, and you know, and whether you're you know, riding the right horses, and maybe reallocate some stuff. It doesn't, you know, just to sit and wait and hope, because there has been a lot of movement. If you look at the stock prices of the juniors, the explorers, or a lot of them, it's a wide band of who went up, who went down, who's gone sideways, and up and down again. And you know, maybe it's time to take a look at the ones you did well on, and make sure that that's really where you want to be moving forward from this point in time. Or some of the ones, you know, or get out, or, you know, again, I think it's probably a good time to be looking at the whole, if you're into uranium and you're you know, you're not just riding one horse, take a look at the stable, and make sure that you shouldn't be swapping out a few jockeys there.
Yeah, I agree with that. The difficult thing about this space is you get people like Rick Rule. He's a really nice guy, and I speak to him off camera a lot, and but he comes up with his own little phrases, which is very, very confusing. And he going talks about some of his investments he's held for 7-9 years before he's seen his 10-bagger, which obviously he doesn't get every single time, despite the narrative. But you know, I was down 50% at least twice during that whole period, etc. It makes people who've like bet on the wrong horse think that that's going to happen with them. I would say it's about Rick. Rick's got some very, you know, fundamental things, like, you know, he needs the kind of size and scale and grade of deposit. That's the kind of his kind of key driver. So he's not playing a momentum play here. So perhaps it's a slightly different profile. If you were going on a,
well, he's also giving you one example. He's giving you one example out of a portfolio of hundreds of investments, and he's got a team of people analyzing the Jesus out of all of them. So there's that. And I think, you know, Rick comes up with some very interesting analogies and examples of what can go right or wrong. But he has a quite a
even he gets things wrong, would you say? Even he.
Yeah. Well, of course. Yeah. For every right, there's a wrong. For every buyer, there's a seller. You know, for every winner, there's a loser. Yeah.
Right. I'm not sure if we've kind of answered the question. I don't feel we have, which is basically, you know, big guys versus little guys, big miners versus juniors. I think at the moment, and certainly for the last, you know, since the beginning of 2024, we've been very much 80% of the portfolio is in developers and producers, and then, you know, we've got 20% of the portfolios in, I guess, slightly higher risk, high leverage, high risk, they say, don't they? But even then, you know, it's heavily vetted and filtered in terms of who those juniors are, those explorers are, because I gotta like that business model. I really got to like that business model.
And I think at the end of the day, that's going to be it. If you're looking at explorers, if you're looking at developers, you have to understand from your perspective what you think their out is. You know, where's their harvest in all of this? And if they're not set up for that, then, you know, if that's not what they're talking about, or if you don't see that there, then you know, you're just playing the commodity price game.
Well, I like, that's why I like your model. I do like your model where you get to use someone else's money and keep some of the upside. That kind of works for me, right? Because you're not blowing your brains out with these kind of dilutive raises, but you're able to drill significant meters, multiple locations,
and we already know it's attractive to the majors,
right? Okay, and I think that feels like, and that is a kind of you're spreading the risk, you're spreading the bets, but you're also spreading the upside potential because you're getting after it quicker as a result, right? So nothing wrong with it. I'd rather have something of something rather than none of nothing. Or all of nothing. It's all of nothing, well, and effectively none of nothing. So all of nothing, for sure. So there's something quite attractive about that model, and I've seen that work in uranium and gold and other commodities too. It feels a little bit. It feels like you're kind of giving away all of the upside, but actually, when most of what explorers do is high risk, it's not a bad strategy. It's not a bad strategy at all.
It's a Hail Mary.
It's a Hail Mary with someone else's money. Well done. Right. Anything else you want to talk about?
I don't know.
Your attitude.
We've been yeah, that for sure. No, it's we've been doing a lot of talking these days. We're going to be doing more soon. Everybody's herding into Toronto shortly, so we'll be
I'm intrigued.
What everybody's up to at the same time. That's always interesting. It's an interesting show because you get a sense, like even it's just standing in one place and listening and talking to everybody for that weekend. You come out with a real guttural sense as to where the attitude is, where the market's at, and what's who's happy and who's not. It's interesting when you get everybody in the same place like we do that for that show.
Okay, feeling positive for 2025. What's going to happen? 2025, good year for uranium, not a good year for uranium. I think last year was like a pause. I'm hoping for better things.
Yeah, I think again, if we stop watching the spot price, I think it's going to be, from a long-term perspective, it's going to be a lot of the same. I think it's going to be that continued tightening. I think once a month we're going to get a look at the long-term price that we can see, and we're going to continue to see that thing ticking up. I think we're going to hear more good news out of Cameco. We got to listen to them because they're the ones with the real eyeballs on the situation. And I think a lot of the geopolitical last year was just so many minor and major aspects from a geopolitical standpoint that it was hard to keep focused on anything. But I think 2025 is going to be a solid year. It's going to be solid. The price is going to tighten. It's all going to be good. All going to be good. But I'm not looking for a hockey stick, tomorrow. Which is what, that tends to be what a lot of people were expecting out of uranium a few years ago.
I'm so bored of that. I've kind of almost railing against that. I just hated that.
It's hard to manage into it. It's hard to raise money into it. It's hard to make any decisions based on it.
But essentially, Lester, it's like Peter and the Wolf. It's like you just can't keep making those claims and expect people to be delighted every time they hear it when they know that the inevitable is going to come. It's not a catalyst moment. It doesn't matter. And
no, when I plan on being around more than a year or two, you can't.
That's what I say to people. Guys, please, for crying out loud, please get into the fundamentals. Do the work, look at the company, listen to what the company's saying, and deep down like what's real and what's not. If you're a momentum player, I don't think it's for it. It's definitely up for me. Right, better get off this call.
Okay,
I will see you at the weekend.
You will. You will indeed. You will indeed.
-9 to -20.
Yes.
Looking forward to it.
But no bad weather. There's not going to be snow, no rain. We're going to have lots of heaters out, and it'll just be cold. So just put an extra sweater on. I'll lend you this one. Yeah.
Thank you. Yeah. Well, actually, it's quite like mine, isn't it?
Okay. I think this is Scottish cashmere, as I recall. So
we're menstruating together. Yeah. Let's switch off now. I know. Bye.
Bye.